Okay, so, ladies and gentlemen, EFL 2026 has arrived. Actually, just in time, because the entire UK might be banned from using X if Elon doesn't pull his fucking finger out. So, if I suddenly disappear, you'll know the reason why. Right, everyone's got their earphones in, or their kids firmly out of earshot. Some of you know I can be quite direct. I'll try and keep it civil for at least the first 5 minutes. So welcome to everyone that is joining us for the first time, and of course welcome back to everyone that is returning and that's been to prior EFL sessions before. I hope you all had a fantastic Christmas and that your new year has started strong. I've had a very productive start to the year. I've been very busy with AI. I vibe coded a dashboard for my trading. It alerts me to the exact moment that I think, what a great trade, and reach for a screenshot for X. No, jokes aside, I do use AI. I actually dragged the text I wrote. You see, I'm going off on a tangent now, but I actually dragged the text I wrote for my stories from 25 years as a trader that I keep promising to do on X into ChatGPT, and I asked what it thought of it. And it came back with a long wall of text, but with some absolutely wonderful lines of advice that I just have to quote before we start. So ChatGPT told me, "This section has good storytelling instincts, but in its current form it's carrying a few landmines that can blow up the room. Or you. If this is recorded, or you've got compliance-minded people in the room, it's a gift-wrapped problem." And my personal favourite, Tom, the P. Diddy line. That's a sexual assault flavoured reference to a real person with serious allegations. It's risky and kind of gross. Anyway, that was what ChatGPT had to say about my stories from 25 years as a trader. That'll be coming soon. While we're on the topic of AI, and before we get into the markets, is anyone else's X feed just wall-to-wall nonsense, saying things like, ChatGPT has a secret mode, it can think like a god, here are 10 prompts it feels illegal to know? I actually fall for this stuff. When I saw that recently, I logged straight in and I typed, "You are Stephen Hawking, minus the chair, with the trading proficiency of Paul Tudor-Jones and the balls of Jesse Livermore, please build me a strategy that guarantees me 100R a year in fixed income." Funny thing is, it actually came back and told me not to trade bunds. Seriously, no joke. That's the first lesson of tonight. I actually asked it why, and it said, if you mean the Eurex Euro Bund future, FGBL, it's easy to get filled, harder to trade well. Easy to get filled? Is that a fucking joke? Like, clearly it doesn't know what it's talking about if it thinks it's easy to get filled in the Bund. It's probably the hardest market in the fucking world to get a fill in if your bid or offered at a level. Anyway, I mention AI because I know it's easy to doom scroll X and feel this like sudden overwhelming FOMO around AI and what it's going to do for the future of trading, and there's all these posts of people building entire fucking product suites between taking a shit and having a haircut. And my take is pretty simple. Like, yes, I think building is going to get easier, but does that mean everyone is suddenly going to start making money in the markets? Of course not. I've spent my whole career around traders, and I've come to realise that you can hand people tools that are light years ahead of what they use, and if they don't have the skill, then all you've really done is upgrade their confidence. You know, if you give a crap trader a pro execution platform and a Bloomberg terminal, do they suddenly print money? No. You know, the information at their fingertips can become far greater. The ability to execute on that information can become far more efficient, but they can often still be just a cunt. And now they're just a cunt with better charts, more information and faster fills. A few months back, true story, and then I'm going to get into the charts, we had two traders on the desk that were somewhat struggling, and they wanted something developed that would allow them to get information faster than their squawk. Now, I can't give you the details of what it was, but suffice to say, they both felt it would give them edge, and so they had a developer build it for them. And to be fair, it was built quickly, it worked perfectly, and everyone got very excited. Fast forward a few weeks of using it, one of the traders had turned his performance around and gone from an equity curve that was going sideways into one that went from bottom left to top right in a way you can only dream about. But the other trader, using the same tool in, might I add, the exact same way, has continued to lose money. Now, the tool has clearly worked for one of the traders, but not for the other. But that's my point, that the tool only does one part of the job. You know, it gives them information faster than the next person, but the edge isn't the information, it's the decisions that are being made after the information. What market do you trade? What size do you trade? Where are you wrong? What does being wrong cost you? How far do you press and run your position if you're right? And so on and so forth. So same tool, same inputs, two totally different outcomes. So either the tool's haunted or skill still matters. Now, none of this is to downplay AI and its ability to build things for you, to alert you to opportunities, to give you ideas, to deep think for you, but it's just to say it's not likely a panacea for all your trading woes. My advice, and people are asking me about AI already on a regular basis, is to use it to try and make everything you do a little easier, a little more effective, keep an open mind, and be, as always, inherently curious, and slowly build from there. And I don't think that anyone's late to the party yet, but I think that the window for being lazy is closing. Okay, on with the show. Right, Monday's markets. This is where I'm going to tell you what I'm interested in right now. Now, since we have a live session tomorrow, the aim of this session is to really answer one question. Is there anything I will be doing tonight before I see you in the morning? And the answer to that is no. Because tomorrow's CPI. And you're always better off making decisions post-CPI as opposed to trying to guess what it's going to do over a number that volatile. But with that said and done, I do want to cover a few things. And firstly, I want to cover an opportunity from today. Now, you can see the cash silver on the daily chart on your screen. And when the market opened last night, what I wanted most was to buy silver. Because when I looked through the markets, there was a very clear setup. And it was the closest out of this and something else that I'll talk about shortly to setting up. In fact, last night I was chatting to my friend Billy. You'll know this ledge on X as at 0x Glanton. He sent me a message saying good luck for tomorrow. I was thinking, what do you mean good luck? That sounds like there's a possibility I could do my fucking arse. Anyway, I said to him, and I quote, really fancy a silver long. Might have to steam in tomorrow and turn up at 7 p.m. and I'm either on side or I've done my arse. But in actual fact, my limit bid didn't get triggered because we just took off straight from the open, as you can see on the day chart here. But I do want to highlight a few things. Firstly, the setup. Now, to my mind, this is extremely simple, and I'm sure you're going to agree. There is a parabolic trend to the upside in silver. There are a lot of people trying to pick a top. You don't have to look very far on X to see that, and the market has been going up and up and up. We make this swing high here. We pull back and we make a swing low. We make a swing high here. We pull back and we make a higher low. And this candle here from Thursday last week is a spike candle. And you'll notice that we get what I refer to as a thrust candle the day after. Now, those of you who know me, and I know there will be some people that are new to this that don't know me, and you will get this information throughout EFL, but those of you who know me will know this is a setup straight from my playbook. When you have a bullish spike candle, you might know this is a hammer, and then you get a thrust candle straight after it. A thrust candle being a relatively wide-ranging candle that moves to the upside and importantly closes beyond the high of the spike or hammer. When you see that, you can expect the market to often trade back in the next session to the high of the spike and then look for longs for a continuation to the next liquidity point higher. Usually that next point that I use as a target is the high that was made before the bullish spike. In a market like this with such a parabolic trend, would it be wrong to go for the high beyond it? No, but in many circumstances and the majority of the time, I'm going to look for the market to run towards the high, the swing high that was made before the bullish spike. So let's take this back to basics, and again, for some of you that already know this stuff, I know this is going to seem very basic, but we're just going to get everybody on the same page. What is a bullish spike on a daily chart? How am I defining it? This is a completed candle. This one here, I wish I had a pen tool, but I don't. Maybe I'll get one for tomorrow. This is a completed candle where there is a long tail, and you want that long tail to be approximately 2/3 of the range of the entire candle from high to low. Then you will get a close not far from where we opened, but importantly above the prior candle low. You also want little to no upper wick. Now let's break down why these points are critical. And again, this is fairly straightforward. The lower wick shows sellers got cut off on the move lower, the market reversed violently. The close of the candle being above the prior candle low is an indication that sellers are trapped. End of day, if they try to sell a momentum break beneath the prior day low, which many do. The little to no upper wick is ideal because you don't want to be closing too far from the high of day. The closer the better. In this example, we still closed a little bearish, but the candle after tips the direction and the subsequent price run nicely by it being a decent up day and closing importantly above the high of the hammer. Again, I will use that word hammer interchangeably with bullish spike. Just depends how you know that pattern. So here was my play coming down to the hourly time frame. I'm going to take it down to the hourly. I'm not going to use market replay here, but it basically closed there on Friday. Well, let's just use market replay. Go on. Let's start a new one. There we go. It looked like that when we opened last night. So my bid was here. My target was the all-time high up there. And for a stop, I will usually use a thrust candle. Now, thrust candle is defined as a wide-ranging candle that closes through an area of structure. You can see this one closes through these highs. So that is a thrust candle there. Having said that, that stop is insanely fucking tight. And I'm all for tight stops, but this is silver. Okay, it moves very sharply. You can get slipped very badly, more than other markets if you're wrong. And silver is not usually a market that I will have a very tight stop in. So I moved this stop back to the low of this candle here. You can see we had some congestion here, and then you can see that we just broke out here. This wasn't really a thrust candle, but it broke up through the last little high that price made there in this area where it stalled. It closed through it, and then we came back, we'd retested that point, that last little high, moved up from there. So I am tucked beyond that with my stop. And that was my play. We're looking at a 3.38R if I'd have got filled. Now again, some of you are saying, could you trade this in the silver futures? Of course you can. I just use silver spot. So what actually happened here? Let's take it off the replay. That's what happened. It didn't pull back last night. It moved up straight away from the open, and it actually reached the target very quickly and surpassed the target. So basically it opened and went up faster than your favorite guru deleting an easy short comment when the market goes vertical. So no fill. And now you're probably thinking, what a cunt. He's called the direction, doesn't get an entry, wants to tell everyone he's right. And you'd be correct. But there are two takeaways here. Firstly, this is a setup you can remember, right? When I run EFL, invariably someone always says something like, great course, right? Maybe it's semantics, but this is not a course. This is me, for the vast majority of the time we spend together, analysing the market in real time. So if I don't point this setup out, there is a chance you might not see it again for a month. And then,
hey everyone, just a quick moment. Below is the QR code for my Discord server. Feel free to join. You can also add me directly on Discord at lgamer69. For more exclusive content that can't be uploaded on YouTube, check out my Patreon here, patreon.com/legendarygamerscyberzone.
you might never realize it's even part of my playbook. So that's why we're covering a missed trade. Because next time you might not miss it, and that is a great setup. So, was that it for the day for me? No. And just to answer a question, Tom, did you try to rebid higher? I didn't, because essentially by the time I had fucking got out of bed in the morning, it had already hit my target. And I, on my swing strategy, only use hourly charts. So if you were seeing this price run up, if you're on a lower time frame, you might be thinking, this, the higher time frame points to a move. I'll try and get in on a 30 minute, a 15 minute, 5 minute, fucking 1 minute, who knows? But I don't do that. On the swing strategy, I stay on the hourly, and that's what works for me. So no, I didn't get in this trade at all. I completely missed it. So was that it for the day? No, we will get onto that momentarily. But what if it had been? What if that had been my only chance for the day and I missed it? Well, that's the way it goes. My general trading philosophy is really simple, okay? The market is constantly advertising for liquidity, right? It's no different to those annoying ad breaks you get in the middle of a film or a YouTube episode if you haven't paid for premium. So if you're constantly getting ads, you need to know what you want to see, where you want to see it, when you want to see it. And until that setup occurs, you want to treat all other market movement as you would any other advert. Skip it. Otherwise, you're going to be the cunt that is sitting on the sofa watching a film, an advert comes up and he's just bought a fucking disposable lighter repair kit. So, to combat the ads, which you can't avoid when you're watching the markets closely, every day I approach the market with a mindset of not wanting to trade, but simply seeing if there's something so fucking painfully obvious that I can't pass on it. This was an example in silver. And this philosophy is what helps keep me out of suboptimal plays. My mother always told me when I was younger, whenever I got some money burning a hole in my pocket in my teenage years, she'd say to me, don't go food shopping when you're hungry. And I think that's a great piece of wisdom that applies to the market. If you are hungry and you want to make money and you're waiting desperately for something, you're much more likely to be less immune to all the advertisements that the market is making. It's breaking a new high. Does that mean that it's accepting it's going to go higher, or is this the fake out? And you get sucked into a lot of trades. So for me, it is about knowing what I want to see and where I want to see it and when I want to see it. And of course, that is the point of EFL, to try and give you that information in real time. Now, here is the key part. Every day, my process is to look through 19 markets, which I listed at the beginning, and try to find what I think is the easiest money. And this silver was what I highlighted last night to myself as the easiest play that was most likely to make money if it's set up. Remember, I've taken my cue from the higher time frame of the daily. I've identified the direction. I've identified where I believe the market is going to move to. It's just a question of seeing whether it pulls back and it gives me the entry that I'm looking for. That entry is a very good one. A lot of the time the market will pull back to there. You'll see an incredibly precise reaction from there and a run to target. Not every time, but you will see it a lot. This time you didn't. The fact that I haven't caught this, honestly, doesn't irritate me at all. Setups like this will come around relatively frequently. You just have to wait for them. But my point is, again, that I have no allegiance to any market. And this is really important. I don't stare at one market like the ES and think, I've got to extract money from this market today and it must be the fucking ES because I'm an ES trader. So I'm just going to stare at it until I see something I like, and I trust that if I'm on a low enough time frame, I'm going to see something I like. Now, I'm not saying that can't work. I'm just saying that's not what I do. I look at 19 markets and I try to work out where there is easy money. And somebody's saying to me at the moment, well, hang on a minute, you're a damn Bund trader. You're looking at the market all day on the lower time frames trying to look for a trade in the Bund. Well, no. I'll come in at the beginning of the day and I will look at what the Bund's doing on the weekly, how it closed the day out yesterday, what the hourly structure's looking like. And if something doesn't leap off the chart to me, then I'm not trading Bund that day. I am technically a Bund day trader, but I could not give a shit if I don't see anything in that market for 2 or 3 days. For me, it's about getting up in the morning and making sure nobody takes my fucking money away from me. So, I am cautious. I do like things to set up in the right way. I don't care if I miss things. The second point I want to cover here is having an idea, but being open to being wrong and knowing what you want to see to know that you're wrong. Excuse me, I just took a sip of water, because often the best trades I've found are when really obvious setups fail. Now, last week I posted a trade example in the euro dollar to X, and then a few hours later I followed it up with a message saying, as a trader, you need to train yourself to see what is happening, not what you want to see happening. And there was a specific reason I posted that, and again I want to go through that trade from last week and explain what it was and why I took it, because I think it bamboozled quite a few people that think they know how I trade, that were quite surprised that I actually went short when it really looked like it should have been a long. So what I'm going to do is I'm now going to bring the euro dollar onto the screen, and although the recording of this is going to be seamless, you're going to see that the screen's gone for a second because I'm now resharing a new screen, which is going to be that one. Should be able to see it now. So you should be able to see euro dollar daily time frame, and I'm going to take this back with market replay. I'm going to take it back to that day there, and what are you going to see? You're going to see a spike, a hammer, a very bullish hammer, long rejection wick, close above the low of the previous session, little to no upper wick. Very importantly, it comes not perfectly, but just ahead of what I always refer to as the LHPB, last high pre-breakout. This was structure. We broke out. The market often comes back to retest it. Specifically, the last rejection wick that we made before breaking out. But that aside, we have what looks like a situation where the euro dollar could be moving higher. And if I'm thinking about this euro dollar moving higher, one of the things that I am looking at in terms of where I think it's going to go first would be to the next swing high point. The first area of liquidity above market. If I got long, and I didn't get long on this, but if I was to have got long, that's where my target would have been. And then if we closed up around there, what would we have? We would have a thrust candle, and then we'd be rebidding the head or the high of the hammer and looking for it to pull back, hit the high of the hammer, and move to a new high higher than the highest point we reached post hammer. So let's look at this in a little bit more detail. The low, by the way, of the day prior to the hammer is always very pivotal to hammers. I always like to see the next day test that low. So they test the low of the day prior to the hammer, where traders are likely trapped from, and I like to see it react from there and push higher. That gives me a lot of confidence in the move. Sometimes if you're very aggressive, you can come down onto the hourly time frame. You can actually look, if you see a hammer, to bid the low of the day before. And you might see some examples of that in EFL. I'm just throwing out a lot of information at the moment. That's a reference point. When you see a hammer like this, the key reference points are the high of it and the low of the day prior. So let's come down to the hourly time frame. And obviously I'll take this off, but this was the target you would be thinking about. In fact, let's just leave it on for there. And as we step forward here, you will see that the market does actually come down to the low of the day before fairly cleanly, and then reacts significantly from there. In fact, you actually get, if anyone's up at that time of night in the UK, I'd be surprised, but you never know. But you actually get a little hammer there, and then we take off to the upside. I didn't take that. I'm just pointing that out as a really key reference point to look for. And then what you want to note is, again, if we just go back to the daily, I said the high of the hammer is to be noted. So if we come back to the hourly, you see that we have started to move up throughout the Asian session. We've taken out the high of the hammer. We have closed through it. Now, the first thing I would say, and again, I did not trade this setup, okay, but I will explain to you that this is a valid trade. When you see a strong move like this, you see it coming off of the low of the day before, you see it accepting through the high on the hourly time frame, to bid this high on a rounded retest. What I mean by rounded retest is any candle that is not the candle post breakout candle. So this is the breakout candle. You need one candle to trade, and then any candle after that. The more the merrier, but any candle after that would make it a rounded retest. Essentially, you're not trading an immediate pullback in the very next candle. That's my rules. I found that works very, very well over the years. So you could buy this on the pullback to here. You could come in, you could put a stop underneath the thrust if you're looking for a momentum play. You could look for it to continue to up here, continue to move higher with your bigger target in mind. But what happens next is where traders often come unstuck, and that's what I want to show you. So you will see the market begins to move back. There is the candle that occurs from 5 till 6 in the morning, straight into the high. Then you will see this, an immediate reaction from there. As you would anticipate, it's a good level. We move to a new high, but then rapidly reverse and close on the level. This price action is very, very interesting because, again, on the Frankfurt Open, we've made a new high, then we failed, and it results in what is almost a bearish engulfing. That's a pretty bad sign if you were long this, and yet even on the close of that candle, you're probably still not offside. But the next candle is very, very key. Look at this 8 till 9 a.m. candle where we test, I'm going to zoom in here, we test the overnight high again perfectly and reject, and then close back down through the high of the daily spike. So again, we have false broken the Asian session high, come back to the daily spike high, tried again, hit the Asian session high perfectly, rejected, and now we have a bearish spike. You can clearly see that buyers are trapped. They've been trapped over the space of 2 hours, and that second rejection spike should be making you think the market's likely to try and auction lower to take out the weak hands. And of course, the weak hands will almost certainly be positioned with stops below the most recent swing low, which would have you looking at underneath here. That's where stops often accumulate, under lows, above highs of course, especially the higher time frame swing highs and lows. So my play when I saw that, and again I wasn't long this, but my play when I saw this and saw that longs were essentially trapped was to come in, and again I showed you this on X, come in on a break. So I used a stop entry order if it took me below the low, stop above the spike thinking we shouldn't go up to test that level again, target 1 pip beneath this low, and the rest is history. This was actually a very, very quick trade resolution. When I'm trading on the hourly time frame, by the way, don't usually get trade resolutions this quick, but this one was. So that is an example, to go back to what I was saying earlier, of understanding when you might need to reverse a bias, being aware that you need to be adaptable as a trader, and you need to train yourself to see what is happening, not what you want to see happening. Because if you're long and you're seeing an inside week failure, you're seeing a daily bullish hammer, you're seeing the market test the low of the day before the hammer, you're seeing it move up towards the highs, you've maybe bought this area if you were, if you'd put an order in there, you're on side, you're thinking to yourself, this is the last fucking thing I want to see. And yet it doesn't matter what you want to see, you have to look at the information that the market is giving you. Now I'm not going to lie and tell you that it is easy to be bullish a market based on the higher time frames and then suddenly go short. It isn't easy, and it's actually, when people ask me what kinds of things took you the longest to learn, that didn't take me long to learn at all. It took me a long time to implement. It feels, maybe not so much these days because I'm very used to doing it, but certainly for a long time it felt very uncomfortable. Very uncomfortable. And the reason it feels uncomfortable is A, because you're going against the bias, but if you get the trade wrong, it really fucks with your head. Because of course, if you short this and get it wrong, what are you going to be telling yourself? What a fucking idiot. What the hell did I go short for when the weekly pointed to the long, the daily pointed to the long? And again, there is edge in this setup, but it doesn't change the fact that it hurts your psychology perhaps more than the average losing trade if you're wrong when you're trading against your bias. So it's not an easy trade to take, but this is why I posted it to X. I don't usually post trades to X, as you guys will know. I usually just crack stupid fucking jokes. But I posted this to X because I thought it was a very good example of you needing to basically be flexible and not be scared to take these kinds of trades, especially if you're armed with information that the market can't do what you feel it should be doing. Okay, and this is not just based on an SFP. Someone's saying, "Oh, well, it broke the high there. That was the signal that it was failing." That was one signal that it was failing. But the biggest, in my opinion, was the second retest of the high that resulted in the rejection wick, and then the beginning of the continuation move lower. Okay, I didn't short it on the close of that candle. I shorted it with the momentum through the lows. So that was a trade, of course, from last week. Today we looked at the trade that was missed in silver. Let's look at another trade from today, and it's actually very similar to the silver, but in reverse. And this is in the Aussie dollar. So I'm going to minimize this and I'm going to pull up the Aussie dollar. I know some of you are going to be familiar with this trade because according to the posts that I got on X and some messages I saw in the Slack group, quite a few people got this. However, I don't think this trade worked out in a way that a lot of the people that took it would capitalize from. And again, this is another reason why I want to mention it. Now, actually, Aussie dollar, while we're here, as I was saying at the beginning, but I think before I turn the recorder on, is my best performer in the whole of 2025. Analysed, of course, I'm sure you have or should have done, analysed all my trades of 2025. Aussie dollar was my most profitable market of the 19 that I trade, closely followed by BTC, and third was Euro Pound. And yes, I did not fucking see that coming either, because I don't like Euro Pound, but it was very good to me in 2025. So top three markets: Aussie dollar, BTC, and Euro GBP. Worst, as I was saying at the beginning, dollar Canadian. If you see me do anything in dollar Canadian, you might as well just zone out, because it ain't going to go well in all likelihood. I do have an edge in it over a long time, otherwise I wouldn't trade the fucking thing at all. But it was my worst performer in 2025, and I'm not on great terms with it. So, what was this setup in the Australian dollar? First off, look at this spike on the daily. And what I want you to look at is the low of that spike. So, in silver, I said there was a bullish spike, a move away from it the very next day in a thrust candle, then you're going to look for the return to it and a continuation lower. Here, you get the spike, a move away from it. It doesn't come back there in this next candle, which was on Friday, but it comes back to that area today. Again, we have a significant upper wick. We have a close below the prior day high, little to no lower wick, and that's a very bearish looking candle. And essentially, we close underneath this swing high as well, after accepting above it, push higher, reject, and close through there. And now you have traders clearly trapped that you want to try and exploit. Now, when you come in on a day like today and you see the market going vertical into an area like this, it's a trade straight out of my playbook to go short. I'm sure most people, unless they're very new, will know this. Again, let's take it back down to the hourly time frame, and let's just take it back again using our infamous market replay tool, loved by cunts everywhere. And you'll notice what is happening at this level. You have a very important higher time frame level, but you can also see that ATR, I use an indicator, this one up here on the top left that you can get from TradingView if you're using TradingView. ATR is waiting just beyond that level. ATR is of course the average true range of the market. I use touches of ATR, or a lot of the time breaks of this, as confluence to fade trends and look for mean reversion. There's almost no chance you're not going to see a live example of this in EFL, because I trade this very, very regularly. So you are going to see me call this ahead of time. I'll all but guarantee it. But you can see a key daily level, you can see ATR. Now, if you're someone that uses fibs, and I use them very sparingly, but if you are someone that uses fibs, you take it from the extreme high to the extreme low, and you can see the 50%. You can see basically a brick wall of confluence right in that area. So, if you were going to look to take this trade, how should you set this trade up? How did I come into this market and set this trade up? Very, very simple. Short with a limit offer at the level. Stop beyond the spike candle. Okay, that does look like a relatively tight stop, but this is the Aussie dollar. You've got the stop above the thrust candle. well out of the way of ATR. It really has to be a pretty significant move to take you out. And the target is the easy move back for a 1.68R. Obviously, you've got a minus spread off that, to 1 pip beneath the last pullback low. If you step forward, you'll see that that occurs in the very next candle. Now, I know someone is thinking, fuck off, mate. Why get out there? Okay, I mean, sure, it takes stops below a pullback low, but you said when the market comes into a big daily level like this, you know, it will go down and it will test the extreme low that it made before. So surely your target should have been all the way down there, you little cunt. Okay, why are you telling us you fucking got out there? Don't bullshit us here. Look at the daily. What have you got on the daily? You've got a bullish spike. You've got a thrust candle after a bullish spike. What is the high of the bullish spike? It's this line that I'm going to put in, let's put it in blue. That's the line of the bullish spike that the market could easily get bid at if it pulls back there. Now let's take that down to the hourly. And there you'll see why that was the target. You can't fuck about with levels like that. The market comes into a high confluence area where there is literally a fucking brick wall. You've got ATR, you've got the 50% fib, you've got a cracking daily level. It rotates back to where it found support before. It has to go a little bit lower. It's got to take anyone's stop out underneath there. But it trades a little bit lower. And that is the very key level on the daily. Now, do you always have to go a pip below like I do? Okay, you don't have to go a pip below. You can go on the level. In fact, I have taught so many traders this that will say to me, no, actually you don't want to go a pip below. You want to go on the level because it doesn't always break it. I don't agree with that. It does. It does break it. It very rarely will stop to the fucking pipette at a prior low. But I'll tell you where that does happen, in the Bund. If you try this in the Bund, yeah, you're going to be in for a headache. The amount of times that I've tried offering one tick above a high or bidding one tick below a low and don't get a fill, that's a completely different story. But that's the Bund. The Bund is a complete cunt of a market. But in FX, you will get away with it. So you're playing one level to the next, right? Simple trade, nothing more. Quick in, out. Like my sex life. Now, Monday's markets is about what I think will be good plays for the days ahead. And so far, we've just acted like fucking Harry Hindsight here, you know, pointed out 2 trades from today. One I missed, one I got, and then a trade from fucking last week. But I don't personally think there's much to do tonight. Because we have CPI tomorrow. Now, there will certainly be some plays tomorrow that we can look at in the 2-hour live session that we have from 9 to 11. But I do want to leave you with just discussing this Aussie dollar in a little bit more detail, because this is my best performer, of course, as I said, and we're on it, we're discussing it. But we do have a potential opportunity. Could it be tomorrow? Could it be in the days ahead? But I think this is a very good one. So what I am looking for here is to see if we get a daily close. So that is a close end of day tomorrow, end of day Tuesday. If we get a close below this blue line, which is the high of the spike. Let me take all of this off the chart apart from that line. If we get an end of day close below there tomorrow, I think it is very high probability in the days ahead that we are going to run these 2 lows, principally this extreme one. But you have liquidity underneath these lows. There's actually 3 session lows there. And one thing I've found, and this comes back to pattern failure, is when you when the market suggests it's going to go one way, we had a spike candle here in an overall uptrend, albeit this consolidation. We close above the high. That looks pretty bullish so far. But if we get a daily close through that, a lot of traders are going to be trapped, and you will usually find it will auction very quickly down to their pain threshold, which will be underneath these lows. So the first thing I'll tell you is that a daily close through there Tuesday, I'm coming in Wednesday trying to get short that fucking thing with this as a target. This area is going to be very, very pivotal to me. Do I think it's on the cards that we're going to get a daily close down through there? I don't know. All bets are off because of CPI tomorrow. I know at the moment it has essentially reacted from that shooting star or spike candle low. I know that we have this area of swing high above it. So if we draw that as a zone, we have a zone there that could well hold price. But I'm not really interested in could well. You know, that means fuck all. I need to see, what does it do? Does it accept through here? In which case we're going to a new high in all likelihood. Or do we get back and close down through this high in which we're actively looking for shorts? Intraday, it could be very, very interesting because both those things could happen intraday post CPI. We could crater through here. We could start steamrolling the highs. I think there could be a trade intraday post CPI. I don't think you have to wait until the end of day close, but it will be a stronger trade. So my conviction level will go through the roof if there is a daily close. Now, again, this is why I'm doing these live sessions with you so that we can clarify things in real time. Because I know some of you will be thinking, well, yeah, but right, what does a daily close mean, right? It's 67.04 that high. So if we close at 03, is that it? Bulls deep short the next day? Like, how far of a close through it do we have to go for it to be a bearish close that we're going to go short? And I don't have that exact number for you. I will eyeball this. I will see what it looks like. But, of course, if I'm going to go short or go long, I'm going to tell you. But these are the pivotal markers. The high of this range for a long, this low for a short. And I think it either sets up a run to the high or a run to the low. So right now we're kind of left with this situation of it could go higher, it could go lower, classic guru cunt. If it goes up, it's going up. If it goes down, it's going down. Well, like I say, yes and no. It needs to accept through the levels. I'm not going to just say, look, if it spikes up through here on CPI, we're going to the fucking moon. We need to see it close through, print through on an hourly, not come back in the very next candle, but one candle after. The same thing reversed for the low. Remember, the way I see things, the importance of the rounded retest is time. The longer that we spend through a level, in terms of time, the greater the acceptance. So time equals acceptance for me when I'm deciding the validity of a breakout. I think of all the markets that I've looked through tonight, and of course we're going to do a detailed kind of rundown tomorrow. We'll pull up as many markets as we can because I know some of you guys get very interested in why I'm not interested in certain things as opposed to why I am. But of all the markets I look through, this leaps out to me as potentially being the easiest to trade in the days to come. I say that because it has two very clearly defined areas to engage at. It has two very clearly defined targets. And as a result of that, I think this looks nice. I think it looks fairly straightforward in terms of a first market for us to focus on as we come into tomorrow and as we build out the week. So I will leave it there tonight, and the reason for that is because I'm not doing anything tonight. I've got no orders in the market currently. We're going to be back here at 9 o'clock in the morning. We're going to spend a good couple of hours looking at what the market could possibly do over CPI. Where are the reaction points that we might look to fade moves? Where are the points where we might look to join trends and engage with the market and try and get a proper process and plan built out for what is likely to be a very, very volatile day, and what is likely to be a difficult day for newer traders, a day that many traders will completely do their arse on. So I will leave it there for tonight. What are the 19 markets that I trade? Let me tell you what they are. So you can see 6 of them on the screen at the moment. So 6 majors on the screen. Add in the New Zealand dollar versus the US dollar as well. That's 7. You're going to add in 3 crosses: British pound versus Japanese yen, euro versus Japanese yen, and euro versus British pound. Now we're up to 10 FX pairs in the spot market. We're going to add in 4 equity indices: the S&P 500, Nasdaq 100, DAX, and Euro stocks. They're all traded in the futures. Now we're up to 14. You're going to add in Bund, which is 15. And you're going to add in BTC, which is 16. And you're going to add in gold and silver, which I trade in the spot, 17, 18. And the 19th is crude oil. Are some of those markets easier to trade than others? Yes, of course. And again, that's something that I think you'll hear more of me talk about in EFL. I think, contrary to what a lot of people say online about edge and where there is edge and where there isn't, I think there's a lot of edge in FX if you're very picky. I certainly haven't seen a deterioration in my edge in FX at all. But I think there are markets that are at the hard end of the spectrum. I do find dollar Canadian hard, like I said. I find Bund very, very hard, and you know me. It's my primary market that I trade on the lower time frames. Bund is a really fucking hard market. I don't know about whether AI will give you the same information, because we're really going circular here and ending up the session talking about AI, which I began the fucking session with. But try asking AI what it thinks is the hardest market to trade, because I asked it, and it said Bund every time. It just came back and went fixed income futures and the hardest markets to trade, and it's just given me reams and reams of information on why it's so hard. And I don't disagree with it. It is a very, very difficult market to trade. It's a difficult market to teach as well, I believe, which is why you'll see a lot of my focus during this EFL probably will be on these 19 markets that I trade on the swing strategy. Even Bund is easier to trade on the swing strategy than it is to trade on the lower time frames. That doesn't mean that we're not going to cover it at all, but it is not an easy market to cut your teeth in. And obviously EFL for me is about getting you guys to the point where you're profitable or increasing your performance, and at the same time showcasing my skill. So if you think I want to showcase my skill by sitting in the world's hardest fucking market, think again. No, we will trade Bund. We will. But it's not easy. It's really, really tricky, Bund. That's why everybody's left it, and I'm just single cunt on my own at Rain, pressing buttons all day. Right, ledges, I'll leave it there. I'll get this recording out within the next hour, and I will see you at 9 o'clock in the morning, UK time. Cheers, guys, and thank you so much for coming. It's been a pleasure talking to you, and let's see who gets kicked out of the webinar tomorrow. I've already got my eye on a few of you.